The news that some OPEC members were exploring the idea of suspending Russia's participation in an oil production deal sparked panic in the market. As a result, oil prices immediately went down, suffering steep losses. However, the energy market has already begun to gradually recover, in addition to turmoil caused by the European Union's decision to impose an embargo on Russian oil supplies. Disagreements among the largest oil producers may add to market uncertainty. In this case, chaos will be accompanied by severe supply disruptions, as an exclusion of Russia from the oil production deal will only exacerbate the situation. Many market participants are now highly concerned about a possible large-scale energy crisis the market has never seen before. Thus, after the first emotional reaction, investors began to wind up the consequences, which were the reason for a resumed rally in oil prices. From a technical point of view, Brent crude oil failed to withstand pressure from speculators and was unable to consolidate above the key level of $120 per barrel. The quote entered a technical pullback, losing almost 5% in value. The level of $115 per barrel, the broken upper boundary of the previous sideways range, now acts as support. If the price is not able to fix below the 115 mark, the asset will resume its upward cycle and then probably break through the resistance level of 120. Amid growing fears over real energy shortages, investors have shifted their focus to strategic resources, which are essential for the economy. Judging by the dynamics of gold, many investors have decided to get rid of the safe haven assets, fleeing to more significant assets, including energy. Apparently, the yellow metal will trade under pressure until the energy market stabilizes. The price stagnation in a range between the levels of $1,840 and $1,817 per 3 ounce ended with a breakout of its lower boundary. As a result, gold fell to the level of $1,830. Due to its local oversold status, the metal may well see a rebound, which will lead to a temporary relief rally. However, as long as the quote is trading below the 1,840 mark, there is a likelihood that bears will continue dragging the asset down. Oddly enough, the ruble showed no reaction to what was happening in the global markets. Yesterday, the dollar-ruble pair was highly volatile. Indeed, high volatility has been a common theme for the Russian currency lately. However, the ruble ended the trading day near the opening price, remaining almost unchanged. At the same time, both an embargo on Russian oil and the possible exclusion from the OPEC Plus are exclusively negative factors. All this is happening amid record-high energy sales. That's demand for Russian oil and gas is only rising. This can be attributed to growing fears of possible supply chain disruptions and energy shortages. Moreover, some believe that the European Union's decision to abandon Russian gas will result in LNG disrupted supplies and a shutdown of enterprises in many developing countries. Thus, this is the prospect of a higher demand for Russian energy that prevents the ruble from suffering sharp losses. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.